Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about how this portfolio beats the S&P 500, how this portfolio beats the TSX 60, which is the Canadian index for the top 60 companies in Canada. But before we get into that, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we'll give you guys an update here, update all the trackers, and show you guys how the portfolio is actually our portfolio. This portfolio is outperforming the S&P 500, which is the benchmark for the US economy, and what a lot of people correlate to a successful investor. Taking into consideration we're only in February, so it might not last long, but I thought it'd make for a good title. And then we'll show you guys how it's outperforming the TSX 60 as well. But as we all know, February 21st, the markets will reopen Tuesday. 21st is Family Day in Canada. I'm not sure what holiday that is in the US. It might be Family Day. I'm not sure because I'm Canadian. But we'll get right into the portfolio here. For the day here, we are up $79.71, up 0.75%. For the 1 week, we are down $125.04. For the 1 month, we are up $330.38, up 3.17%. For the 3 months, we are up $621.44, up 6.13%. For the 1 year, we are up $1,957.04. And for the all, we are up $2,308.32, up 27.3%. We have $75 in the cash count. We leave that in there because we only bought one share and then a fractional share as we continue to dollar cost average into VFV, which is the Vanguard S&P 500 index fund. And that's the one that we started this year, and we're slowly increasing that position over time. But the position we bought today was TD, which is Toronto Dominion Bank, ticker symbol TD. Closing out today at $106.23. Down 36 cents on the day, down 0.34%. Okay. We now have 7 shares of this. Average price of getting in, as you can see here, for us is $81.41, and it holds about 6.96% of the portfolio. Today's return was down $2.33, down 0.31%. But our total return since owning the position has been $173.74, up 30.49%. Now, something about Toronto Dominion Bank, or TD, is that it has been on a tear for the past year, past 3 months, past month. Of course, taking into factor the market is just volatile right now, but they've hit all-time highs I think a few times now this year, which is absolutely fantastic. So it is one of the big 5 banks in Canada, and as we all know, I am very biased when it comes to financial companies. I just know how they operate. I believe in them, specifically Canadian banks, as they have a tough time expanding in the world. So it's very concentrated. There might be some concentration risk when it comes to geography in investing, but I just love financials. I love banks. And so today we did purchase 1 share at $106.40, 1 share today. And yeah, so we'll go ahead and update the trackyourdividends.com. But before we do that, let's show you guys the fractional share here for VFV, which is the S&P 500 index fund with Vanguard. Today closed out at $98.54, down 26 cents on the day, down 0.26%. So as we buy full shares, as we usually do every single week, we will always contribute $25 to the index fund of the S&P 500. And some people might be starting to ask questions on why I'm doing that, and I'll explain that in another video. But today we have 1.7312 of a share of shares, a total position value of $170.59. It holds 1.6% of the portfolio, and our average price of getting in is $101.08. Today's return is completely off, just so we are aware of that, and total return today was down 2.52% since owning this position, down $4.41. So again, just to show you proof, $25 today at a cost basis of $99.08, and we purchased 0.2523 of a share. Okay, so that's the portfolio at the end of the week here, not doing too bad. I do enjoy the fact that we are able to continue to make purchases as we continue to do that. So as you can see here, the portfolio from last week closed out at a balance of $10,513. We are up for capital appreciation or capital gains of $2,310. Dividend yield, if you build a portfolio as it stands with these positions, your dividend yield, which would be 3.29%, that would be what you would get as sort of a return on a yearly basis. However, with the strategy of dollar cost averaging, we are getting 4.22%. So we are getting more of a return than if we were to build the portfolio today. And that is the power of dollar cost averaging and slowly building your positions over time instead of doing one lump sums or timing the market. As we know, timing the market is better than timing the market. So annual income for the year, just off this portfolio alone without the updated positions, we get an annual income of $346, which is great. And as we go down to TD here, we have 6 shares. So we're going to go ahead and update that position. This is where it's at currently. Go ahead and add that holding. Ticker symbol for Toronto Dominion Bank is TD. Now, when you're in Canada, you hit TO for the Toronto Stock Exchange. 1 share of that at a cost basis of $106.40. Go ahead and add that holding. And then we'll go ahead and add the holding for VFV, which is at the bottom here, as you can see. Sorry if I'm moving too quick. So you can take a look at that, and we'll go ahead and add that holding for VFV, which is VFV.TO. There it is, Vanguard S&P 500. And we bought a fractional share. We bought 0.2523, cost basis of $99.08. Go ahead and add that holding. So as you can see here, the portfolio now is worth $10,644. Dividend yield, if you were to build the portfolio with the updated position, is 3.29%. Our yield on cost is 4.2%, and the annual income has hit $350 per year, which will be reinvested into the portfolio to get that compounding effect going. We use less of our own money that we work hard for, and we use more of the company's money that they're paying you to reinvest to continue to build that compounding effect. So as you can see here, TD, now we have 7 shares. The annual dividend, which is paid on a quarterly basis. So if you divide that by 4, you'll get your quarterly dividend based on the amount of shares you have. But the annual is $24.92. VFV, as we can see here, we almost have 2 full shares. The price today closed out at $98.54. Is that correct? I think that's correct. Yep. And our yield on cost is 1.12. Yield today is 1.15, and we're getting about $1.96 from this position on a yearly basis. So that's trackyourdividends.com. That's where I use, where I update the positions, and I update to give myself an idea of how much dividends we paid out in total for the year that we can reinvest consistently week over week as we continue to put $100 in every single week. Okay. Now we'll go to ShareSite here, which is the tracker for the performance of the portfolio. And this is where we beat the S&P 500 and the TSX 60. Everything's updated in positions here. So just everyone's aware, 7 shares of TD and 1.7312 shares of VFV. Okay. So as you can see here, capital gain performance wise, we're at 1.7%. Dividends, we've received $33.43 so far since January 1st, which gives us a little boost of 0.32%, and currency gain, because we do own US stocks in this portfolio, is about 0.19%. As you can see here, our total return is $230.57. We are up. This portfolio is up 2.21% in this calendar year. As you can see, we can even track all the way. Oh, that includes December. December 30th of 2021. So maybe the data is a bit off, but let's go off of January 2nd. As you can see, there's straight growth. If we do a trend line, we are heading in the proper direction. And so we're going to compare this to the S&P 500, and do take into consideration, we are only in February, near the end of February. And so we don't know what the rest of the year is going to be like. I'm not a prophet. I'm not sure that I can continue to keep this up, beating the S&P 500. But over time, the S&P 500 will always beat any fund manager when it comes to picking stocks, whether it's managing any kind of fund that is out there, mutual fund, and so on and so forth. The S&P 500 is the benchmark that people try to compete with. However, if you just invest in the S&P 500, we know that on average, every single year since like 1960 something, you're going to get about a 10% return every single year. And that compounded over time is very, very powerful. So remember 2.21. But now let's look at the S&P 500. Year to date, it is down from its all-time high. We are down 9.33% in the S&P 500 year to date. So that's taken into consideration Monday, January 3rd, first day of the trading year for 2022. And it is down 9.33%. And we are up again, 2.21. Fantastic. So we are beating the S&P 500. Don't worry, it's not getting to my head, and it's only February. Okay. Next to consider is the TSX year to date, January 4th for first day of trading for year to date. We can see it's down 1.07%. The interesting thing that a lot of people talk about when it comes to investing in the US, they don't, I always get maybe criticized for not investing in the TSX 60, but there's a reason why I don't do that. And I'll probably make a video about that. But as you can see here, now this is only tracking since 2006, which is not bad. An 89% return over, I don't know, what's that, 10 years is not bad. 11, 12 years. Okay. Not bad at all. I'm not saying it's not bad. It's just not bad. Okay. So that's pretty much it for the video, guys, and the update for the end of the week. But I just want to leave you with this is, yes, the market is down completely 100%. Now, we all know that, of course, I put $100 in every single week, plus the 25 we're doing for 2022 to invest strictly into the S&P 500. And there is a lot of fear in the marketplace with things that are happening kind of prior to a lot of things. But one of the things that a lot of people are worried about is what's happening in Russia, which is affecting the marketplace as well. And supply chain issues, and really what something like that can do to affect the marketplace. A lot of investors are in this kind of fear-based mindset when it comes to investing. But for us average investors who are just looking to start investing, to start building that wealth for the future, is that the market is down. Take this as an opportunity to even just put $10 or even $25, whatever you can fit in your budget, because the budget is very important, and put that into the S&P 500 or the TSX 60, whichever you prefer, and start letting your money compound. Because we know in Canada, inflation currently sits at 5.1% based on Bank of Canada statistics, and the US is something like 7.5%. Our money is not able to grow if it's not invested. It's going to be sitting in a bank account, and I have no problem with that. But to have your whole life savings sitting in a bank account just doesn't make sense to me, because it is losing purchasing power. And so if you put your money in the marketplace, you give that money an opportunity to grow, to continue to try and beat inflation, which is what we want. And currently this year, we have to beat 5.1%. It is a race or a competition to beat inflation so that our money doesn't lose purchasing power. And over time, as we continue to build our portfolio over time, inflation essentially probably won't matter at that point, because we've had such a great return over the years. And so I'll just leave you with that. Inflation is the enemy. Inflation is what we want to beat when we invest our money, but also just to make sure that we can continue to achieve the goals that we have in place and make sure that we just prosper in the future. And so I'll leave it at that. Have a great weekend, guys, and we'll definitely see you in the next one. Bye.